In the metals quadrant, taking a look at a June gold contract, which had a volatile session but fell from the day's high after testing resistance. It still finished positive, just short of 0.2%, but we did fall off that high, which is resistance after the sort of rotational move gold has made. The high today was 23.3610. That was a 1.09%. The low, 22.9430, was down a little more than 0.7%. We ended up finishing the day up about 0.25%. Gold has broken down short term, having fallen from the April 19th high close of 24.1380 down to yesterday's low of 22.9170, which totaled minus 5%. There's now light resistance around 23.37, and while we did get close to it today, we fell to close a decent distance from the highs of the day. So not a bullish technical pattern yet. The balance sheet yesterday, according to the FOMC, basically took the form of mini quantitative easing. In other words, they said they're going to slow the pace of balance sheet reduction. So while they didn't adjust rates, they are taking that balance sheet reduction and turning it a little bit more dovish, taking less of the balance sheet off. That is, no matter what they say it is, a mini easing, and that is bullish for gold prices because it means more dollars in circulation and a weaker dollar, along with U.S. Treasury yields, which we saw drop for the second consecutive session, sending the dollar lower and gold higher again. The dollar really fell substantially against the Japanese yen. That was, of course, because of the second day of intervention from the Bank of Japan, but all of that gave gold a little bit of a boost, even though it didn't sustain it throughout the day, despite the drop in the yields between 7 basis points and 2 basis points, depending on where on the curve you were looking.